course, we are putting focus completely on the fixed income space at this stage of the game. Run us through the kind of activity you're seeing in the currency space specifically, because we had election concerns initially keeping that Naira pretty weak.
Well, currently as in the market, what we're seeing now is that considering where our external reserves are and where oil prices and the direct relation to the strength of Naira, the Naira seemed to be relatively weak now. It has two sides to it. From a general economic perspective, it being weak is not exactly most favorable to the regulator, but from an offshore investor perspective, I think this is the ideal scenario and the ideal time for an offshore investor to come into Nigeria, because if you look beyond what is happening now, which you alluded to, which is around the political landscape, if you look beyond that into the future, the expectation is that the Naira will definitely strengthen. It's been a while since we've been at this level of production, over 2 million barrels, and at this price of oil, over $100. So once we get past the flux of the political scenario where people are trying to get out due to the uncertainty and people are not coming in, once we get past that, we expect that we'll see significant strengthening of the Naira, and it might happen much faster than most people anticipate. And if I could add, the other side to it is that the interest rates are relatively high, which also makes it a very attractive play for the investor. So once all these things happen probably around the same time, we could see sharp moves at very suddenly.
Of course, as I was saying earlier, certainly when it comes to the equity space, investors are still pretty tentative, given the fact that it's only the first leg of the election process that we've seen unfold so far. So what kind of sentiment is on the ground at the moment in terms of how the election process is going to unfold from here on out?
Well, the last election did come as a surprise to a lot of people. I think there was much more negative sentiments towards how it will turn out. But contrary to what most people expected, it did turn out very well. I think there have been statements saying that this has been the fairest election we had in a long time. And I think what that has done is that it has increased people's comfort around the way the election will play out. However, I wouldn't say that people are ready to jump into Nigeria right now. I think, like you said, there's still a lot of people want to wait and see how, especially the presidential election will go. My call on this would probably be that I think it will also come out much better than most people expect. And what we should watch out for is that just after the election into the governorship election, we might see people start to make those decisions as to whether they want to come in or not. Because it's going to be a first movers situation. If you wait too long and everybody has come in, you wouldn't get into the market at the best time. Right now is actually the best time if you do have the courage to come in now.
Okay, well, let's take a look at that macro perspective for a bit, because we've got all eyes on that one-year treasury bill being issued tomorrow, waiting for that to show direction, for example, that interest rates are going to be taking moving forward, especially where we've got inflationary concerns persisting on the back of that higher oil price that you touched on. What's your outlook in that regard?
Well, yes, like you said, we do expect the next inflation figures to be a lot higher. And we also expect that the one-year treasury bill, the last auction last month was around the 9% levels. We're expecting that it'll probably top 11%. Now, the key thing to consider here is that this is, in relative terms, an all-time high in terms of the one-year rate. Now, for a lot of people at these levels, these are very attractive levels to go into the government securities. But people want to go in at the best possible time, which is at the peak of the market, which is why everybody is waiting to see where the one-year T-bill will come tomorrow. If it does cross 11%, we expect that there will be further push for the interest rates to go higher. But if it doesn't, then we might see a rush into the 1 year and the 2 year bond. The 2 year bond right now is above 12%. Yeah. And again, that is an all-time high for that tenor of federal government bonds. So, like you said, everybody's waiting to see what happens on the 1 year. Once it's clearer tomorrow, it will determine whether people will wait a bit more to see if it will go a bit higher, or whether it will people will start to rush in. My take is that it probably will not come out as high as most people expect, because there's so many people waiting on the wings. And we should see, going towards the end of this month, more subscription into government securities, and probably the rates start to dip a bit.